Today I'll take you through a 3-year insurance agent's life simulation. You thought you were selling insurance. Turns out you were sold to the insurance company. Over 3 years you signed 68 policies earning $420,000 in total commission. Sounds nice, but you paid $270,000 out of pocket. Relative friend policies collapsed. Self-purchased policies to meet quotas, event fees, training fees, referral gifts. Net take-home $150,000, monthly 4,200 yuan. You're 29, originally an accountant, recruited by a friend. Financial background builds high net worth trust for annuity. Sounded perfect, actually just a recruiter harvesting rookie model. Insurance company new agent training is the industry's most precision-engineered trap. Day 1. You're told onboarding means signing a self-purchase policy. The welcome gift is a 380,000 face value whole life policy. Annual premium 24,000, spun as learning the product as a policyholder. You do the math. 6 years to break even. Can't surrender in between or lose 70%. This policy locks you to the company. Then regularization assessment. Sign 3 policies in 3 months, at least 2 with face value over 500,000. Miss it? Unqualified. Your 24,000 is gone. First big trap is friends and family policies. For new agents, in the first 3 months, 80% of policies come from friends and relatives. Company pushes you to list 100 people, parents, siblings, classmates, ex-coworkers, neighbors. Actually, each has been pestered. 80% clearly say not interested or already covered. You manage 15 policies, mostly relatives reluctantly helping face. Annual premiums range 3,000 to 50,000, and friends don't really understand coverage. Month 13, 30% discover it's inappropriate and surrender, losing 70%, and those 30 families hold grudges for 3 years. Second trap is commission structure scam. Company ads say first-year commission 35%, sounds tempting. Actual structure, 35% is surface number. Inside are deductions. 5% management fee plus 3% training fee plus 5% event sponsorship plus 10% team penalty. Actual take-home 17%. Year 2 drops to 8%. Year 3 to 3%. Year 4 to 1%. Year 5 to 0%. A 10,000 yuan annual premium policy pays 1,700 in year 1 and only 1,200 across the next 4 years. Looks like 6 years of commission. Actually, 5 years accumulates only 2,900. High first-year rate is bait. Old policies become unpaid labor. Third trap is event expenses. Company requires 2 product explanation events monthly. New agent must bring 3 prospects per event. Each gift budget 300 yuan, thermos, skincare sets, towel sets, plus shared 200 venue fee. Each event costs you 1,100. Skip one and you forfeit 500. Annual 24 events total 26,400. Of attendees, 80% say, "Let me think about it." Actual sign rate under 15%. This money is out of pocket for new agents, but the pitch is investing in your network. Fourth trap is MDRT myth. Company boasts top agents make millions, benchmark being MDRT, $1 million round table, requiring 124,000 US dollars, about 890,000 Chinese yuan, first-year commission. This threshold captures under 1% of insurance agents. Company showcased 1 million agents earning 1.5 million yuan. Actually, their first 3 years built 800,000 yuan client reserves, and annual renewal plus new signings maintain it. New agents chasing MDRT in year 1 actually lose money. Event fees plus self-buy policies plus training costs often 40 to 60K. Output under 100K. Fifth trap is team leader layered siphoning. You sign a policy with 20K commission. Your team leader takes 15% equals 3K. Team manager 10% equals 2K. Branch manager 5% equals 1K. Provincial manager 3% equals 600. Headquarters enterprise center 2% equals 400. 6 layers totaling 37%. Your nominal 17% rate. is actually 11% take-home. This layered model is called pyramid-style insurance marketing, repeatedly cracked down by regulators, but persists. Your 2-month grind on a policy gets siphoned by 10 people above. Sixth trap is product script training. Company teaches sales scripts, not objective explanations. Script book has 100 stock phrases. This policy has 5.5% annual compound yield. Actual IRR 2.8%. Lifetime coverage actually stops at 80. Medical insurance 100% reimbursement has deductibles, ratios, non-covered items. You use scripts. Customer later finds mismatch and complains. Company pushes you out as agent misrepresentation, deducts commission and fines $8,000. Script book is professionally lawyered edge compliance. You as individual become scapegoat. Seventh trap is self-purchased policies. Missed regularization quota? Company hints, buy one yourself. To pass assessment, new agents self-buy critical illness plus annuity plus accident insurance. Total annual premium 32 to 80K. Year 2 assessment short again, buy another. 3 years later, your total premium accumulates 130K. These are you working for yourself. Surrender loses 70%, continuing strains finances. By year 4, your family per capita has 2+ life policies with face value exceeding 10x family annual income, completely overinsured. This money could have been house down payment or kids' savings. Eighth trap is renewal commission illusion. Company says renewal commissions ensure ongoing income. Reality of policies signed, 30% surrender or lapse within 5 years. Each lapse zeroes your renewal commission instead of the declining schedule. Industry average 13-month lapse rate 14%, 25-month 34%, 37-month 52%. Of 100 policies you sold, only 48 still active after 3 years. Renewal commission under 20% of total. Insurance agent true income concentrates in new signings. Old policies are fake cash flow. Retirement? No renewal buildup. Ninth trap is monthly assessment. Company requires $8,000 first-year commission monthly or lose attendance bonus and team ranking. New agents months 2 to 6 survive on relative policies. After month 7 run out and spiral into quota-chasing self-buys or low-quality fraud. 80% of agents die in months 8 to 14. Relatives exhausted plus cold calling ineffective plus monthly pressure plus self-buy slots full. Exit rate 72%. Exiting isn't relief. Policies surrendered within 3 years trigger 30 to 50% commission clawback. 10th trap is cold calling. When relatives run out, company pushes cold calls, sweeping office buildings, distributing flyers in communities, accosting people in malls. Average 50 visits yields 1 lead. Lead to close rate 10%, meaning 500 visits per policy. New agent averages 40 visits daily, 1,200 monthly, 2.4 closes monthly. Being chased by security, banned from office buildings, called scammer, is daily routine. Beijing, Shanghai, Guangzhou, Shenzhen have banned building cold calls and street booths. New agents must use online, but medical/financial advertising is heavily regulated. Violation means account ban. Most new agents abandon cold calling within 3 months. Insurance client truth. High net worth families. Annual income 500K plus. Are quality clients buying full critical illness/annuity/life. Average 30 to 80K premium. But as a new agent, you can't reach them. They have wealth managers/private banking relationship managers. You reach mid-low income, 100 to 300K annual, with affordable policies being few, low premiums, high lapse rates. Insurance companies know quality clients don't need new agent contact, but hire 50K new recruits annually to sweep mid-low market. A rookie as harvester model. Your 3-year metrics. Year 1 issued 42, Year 2 24, Year 3 8, total 74, 6 customer canceled. First year commission, 170K year 1, 80K year 2, 25K year 3, total 275K. But 270K out of pocket, Self-buy 130K, plus event fees 80K, plus training 30K, plus relative gifts 30K. Net 5,000 yuan, annual 1,600. If you'd stayed as mid-level accountant at a listed company, 3 years would have netted 350K, plus housing fund and social insurance, adding 260K. 3 insurance industry years. You worked for the company and bought yourself a bunch of unneeded policies. Biggest industry secret: agents aren't people selling insurance. They're objects sold to insurance companies. Company earns 3 ways from you. 1. Self-purchased premiums, direct. 2. Relative signed policy commissions where company retains 53% via siphoning and other. 3. Commission clawback after exit and new hire replacement rotation, residual value. Agents are industry's lowest, weakest group, packaged as successful entrepreneurs, actually harvested unpaid workers. Industry revenue 300 billion annually. Agent after-tax average under 50,000. Difficulty of leaving insurance is severely underestimated. Your 68 policies left development codes in industry database. Any surrender within 3 years triggers 50 to 70% commission clawback, and surrender typically happens during claim disputes. Of 68 policies in 3 years, 22 surrendered, commission clawback 86,000, with 3 labor arbitration cases. You can't immediately switch careers. You must wait for policies to die to truly exit. Average 5 years. This is the agents can't even give up quitting hidden cost. 2024 China registered insurance agents, 7.1 million. Actually active 1.8 million. Annual exit rate 72%. New regulation unified reporting and industry plus commission constraints has suppressed industry. 2023 new recruits dropped 45% year-on-year. Industry shifts from human wave tactic to professional brokers plus online channels. Traditional 3-month quota rush dying, self-buy and relative policy survival path is dead. Those with banking/insurance regulation backgrounds transitioning to insurance broker firms, independent brokers, have a path. Ordinary new agents entering agent channels is a dead end. If considering becoming an insurance agent, 5 iron rules. 1. Never self-buy to pass assessment. You burn your own money. 2. Never squeeze relatives. 30% surrender within 3 years. Repairing relationships takes 5 years. 3. Never believe MDRT million-dollar pitches. Real assessment quota is the truth. 4. Never sign debt-style advance commission. Early paid first-year commission clawback can turn profit into debt. 5. Never join agent channel as newbie. Pick insurance broker firm, independent, or bank assurance channel, bank stationed. If already decided to enter, 3 survival clauses before signing contract. 1. Self-purchase policies don't count toward assessment, default counts. 2. Advance paid commission has no 3-year surrender clawback clause, widely default. 3. Event fees borne by company or real expense reimbursement, no mandatory monthly quota, default makes agent pay. All 3 are agent pain points, but regulations allow negotiation. Company refuses? You're at a shady firm. High-end direct recruitment channels, AIA/Generali China/UIs, allow these 3. If you're the customer, not agent. Iron rules for family insurance. 1. First by consumer type accident plus medical, annual total 2 to 4K. Don't let agent push annuity with 100K face/50K annual. 2. Pick term critical illness, 30 years or to 70. Not whole life. Same face value. Annual premium 40% cheaper. 3. Annuity/dividend insurance worse than index fund dollar cost for 90% of families. IRR 2.5% versus index fund long-term 5 to 6%. 4. Don't believe agent personal service. Claim calls to company 95XXX faster than agent. 5. Premium budget under 5% of family annual income. Exceeding is over-insuring. Agent career prospects 2025 to 2027. Agent channel will keep shrinking 30-50%. Head companies, AIA/Ping and/Life. Retain high-end broker teams of about 200,000. Others shift to bank-stationed or online insurance. Traditional 3-month first sale model, now regulation forbidden. Those who remain are second career insurance brokers, with stable primary career plus insurance as side gig serving known circles. Pure insurance agent as full-time job is dying. This is the 3-year insurance agent simulation. 270,000 in and 270,000 out. Net loss of time. Company script packaged you as entrepreneur. Actually harvested rookie. You earned the company 1.5 million. You got 150K after self-pay and offended 30 relatives. Share with any friend considering insurance. Save them 270K in 3 years. Next episode you want. A. Tier 2. City hair salon owners 2-year bankruptcy. Or B. Gym personal trainers 3-year insider expose. Comment below.